Okay, as promised, so I'm gonna do a new video. This is the first video this year. It's gonna be talking about mitigation and strong low, strong highs, weak low, weak highs. Okay, so let's get into it. So I'm not gonna waste much time. Today I will even go to a chat and show you something. I'm gonna go to a chat and I'm gonna show you something. Okay, so with all this information that I drop, maybe you'll be able to catch something. Maybe that one mistake that you're making could be fixed. Okay, but I will also tell you the most important things in the end. Well, when we talk about let's first start with strong low, strong highs and all that. When we're talking about strong low, strong highs, we're talking about when the break of structure happens. So you will see that we have these lows, which for me, I'm looking at the minor structure, everything happening inside the big moves are minor structures. Okay, these are minor structures here. Okay, looking at this is minor structures, all this. So what is my majors? So this will be like a POS, right? There's a continuation. Making this one, making this previous low here, strong low. Reason being that probably take out some structures on the other side. And then this high being a weak high, and a strong low, and then a high, right? So this could be that weak high right there, which this is where people can tend to make the mistake. Right, this is the strong low, so just being high, so you know your range. You're within this range, right? And you need to understand that whatever is happening here must not make you lose focus or understanding. Okay, so you see we have this break here. Firstly, we had a break of, we had this structure here within this strong, it was a strong high, so strong high, because it was taking out the lows. Okay, then price break that, and then after breaking that, price came back down. So yeah, price can break this and come back down, and then this is what you can do. We're gonna talk about mitigation and down there. So this is what you can do when that happens. This move going up, look at that. Can look to get involved in a trade here within the city. When price comes back here, you look for your confirmation to know that to buy, because this being a strong low, this has to be a weak high. Price must be able to take this out, being the bias that price is going up, right? And then say you take the trade there and then it's loose, and then you see that now price that the trade lost, and then you look into this area, you change your bias, because that's where doubt comes in play. Change your bias to see a break of structure here, and then you come into these probability zones here, and then when you get into the zones, you look at this as your POS here, the move up. You would say change of character. This is like the move down, one move down, and this that move up, which took up these highs, and then it came down to break structure, right? Then you could look at this as your change of character instead. Let's try this together. That way, being the change of character here. Okay. Change of character, then price comes down here. Still gonna get it. Price comes down here. Okay. And then you've made up your mind that when price gets into this area, you're gonna be selling, right? Okay. Price moves, get here, you sell. So it does this POS, so you get a sell, price moves, and you see price does this. Then now you don't know why you're making the mistake and all that. But in reality, price respected this area, not only that area, probably mitigated on some other block on this area, which is coming from this range. You were getting into a sell on a buying market. Yes, counter trend trades are possible. You can counter trend trades, but that's just something for another day. If I haven't dropped that video, probably I'm gonna drop it in future. Yes, counter trends are valid because of course you can get involved in a sell here. Being someone who is wise as well, understanding that this order block here is the one that caused the break of structure of this. You can get involved in a sell. Maybe you get a confirmation maybe up there, then you can take a profit here. Then you can make a profit, right? Because you can take this order block, that being a proper counter trend trade. But the actual information much more today is about getting involved at the right trend, and then that would make this the new strong low, and then that's just a weak high, and then you make a new high. So you need to know that, okay, now I need to focus on the buying again. So you get involved in the buying again. So let me just confirm this. That's what's going to be a good counter trend trade. Yeah, it's a good counter trend trade. It's not good. It's not good. The reason why I don't really like this kind of counter trend trades is because price already tapped on the 50% of the move. Right? You want price to come back down to the 50%. So it already tapped on the 50% here. So it's not good. So if it hasn't, where I like to take my counter trend trades would be when price take out this zone. I could be happy with taking this counter trend trade if price hasn't came in this area here. But the fact that it has already came, that's not good. Maybe here be a good area to take a counter trend trade because price is not yet. So this sell maybe to this zone or anywhere, depends on the time frame you're trading, of course, and then the refinement of your entries, and you get a proper entry, a good risk reward down back to this 50%, and it's good. Okay, but that's the kind of trend is not what I want to talk about. So you understand when we talk about the weekly, so all these you need to understand your minor structures and everything. So you can be looking at this, and then you can be, like as I'm saying, the right direction it would be buy, and then you would find that okay, there was a mitigation maybe somewhere here on a daily time frame. Let's say you're doing this on the 15 minutes or 30, and there was a mitigation here, and then this can actually be the actual move down. Price could be respecting this daily, and it starts to go down, right? And you'd be still looking to buy, but you're buying after price has reacted to this stronger daily supply there. So it's very important to understand the time frame where price is coming from, the mitigation or where price is coming from. I'm even talking about mitigation already, yeah, but it's very important to understand where price is coming from and where it's actually going. So you can find that, okay, this is not even a strong. It's not even a strong push for price to go up. You find that, okay, there was a strong push before when price get here, like something like this. So this is that daily supply, and then when price was coming, it was strong, and then this move here, which I just explained, this buy could just be something like this. You get it, something like this, which could be like a compression or a distribution phase before that sell happen. But it's important to trade the order flow. Don't guess. If you want to be a seller, if you notice this happened and you want to be a seller, wait for price to take this strong low, and then be on the right side. Wait for price to take this and be on the right side. So let me show you an example down here when I'm talking about the mitigation and all that. Okay, so let's go down. I hope you understand this part because I don't have to explain much. But what you need to understand the take is that understand your time frames. That's very, very important. Like that's key. Understand your time frames, the time frame that you're trading. Okay, understand that. Okay, because like I just explained now, this can be happening after this and all that. So understand the time frame that price is trading on, and understand what time frames you want to be on. Okay, it's important. You can have your strategy, but you might not be able to use it. Some people go through that. I've heard many people tell me that they do have a strategy. They do know many strategies, but they don't know how to implement them into their trading. Okay, so let's talk about this now. We're having this same thing, strong low, strong low, strong low, and then we take this out here. POS or change of character. Let's say change of character. Seek the liquidity from these highs, and then we get this push. So price coming to mitigate this area here. Then you look for confirmation entry. Then let's say you get that price taps in here. Let's say you get that confirmation entry, and then you lose. This is with doubt. We're talking about doubt again. Then this trade you sell, and then you lose. Well, for someone who is not being aggressive, they can take this trade like from here and then put the stops out there. So that might not be a loss. And then take it the low. Okay, to get the low, but you can see the risk reward just because it's a sketch. But at other times the risk reward can be good. You can find that the risk reward is quite very, very good. Okay, and it may be probably target even lower, which will be good. But for if you're a bit aggressive with your stop losses, just putting them above this high and then targeting the lows, then you can lose into this trade. And then when that happens with people, mitigation. I've seen lots of videos on the internet talking about mitigation. I've also made a video I think about mitigation. It's not the matter when it comes to mitigation. What I want to talk about, everyone knows what mitigation is, but the matter that I want to talk about here is that you need to understand the actual price. Price can be slow, can be fast, but that might not be the price action. What do I mean by that? Price can move like this. Okay. And then say it comes down to this area here. And then move stronger here. Probably some liquidity. This being a BOS, right? And then let's say you have an order block here. This is what making sense. And then price can come into this order block very strong. And you can look for confirmation entry to enter there. Or you can ignore it because you see it coming strong, you think it's going to take out this. Understand? Or price can come into this area, mitigate it slowly. And then that could be like your favorite thing. But when something like this is happening, even this, like the second part which most people favor as their mitigation, price coming back slow, also favor the same thing. Okay, I'm not taking anything away. And then price does come here, mitigate, and then you need to understand first your strong low and the strong high, where you are in the market. Okay, you could be trying to take this buy here just because you saw this, but this can be happening after price have a strong high, which is going to respect, and this can go down like this, and then price can push and take this. You understand? Which is what I'm going to explain up there properly. Okay, so this being a now a strong high, and then this was now that it's a weak low because it was taken out. This is to be the next week low. It's just to be week low. So price needs to make a high, not higher than this, and come and take this out. Okay. So you can see you can get involved in the trading as well here because you want that to happen. You want price to take out this low, then price can just be push strongly up here, and then take some time to come mitigate this zone. Yes, this would definitely be a VOS. Minor structure and side structure. Our actual area is this one. It's the actual range. Just do this. Very high. And just low, low, low. Probably it's just call this a low, not low, low. Okay, probably it's a low, low. Very. And then this is our range. This is our bearish range. We need to be selling. Okay. You get this, and then you get this, get price, come back to this. Let's say you find an OB here or a POI, and then you also get second confirmation, price break structure, slower area coming to the pace to mitigation. You get involved. You lost on a sell if you were aggressive, but if you were not aggressive, you wouldn't have lost. And then you get this, sorry, you get this buy. Okay, the low for that will be this one here. There's a low that crosses this move, or you can take it to this one. It's fine. Okay, and then you get involved in that buy. But what you need to understand that this is minor structure or inside structure. I prefer to call this inside structure. Me, when all this is happening here, all I'm interested in, if I'm going to lose trade, whether be sell trade, okay, whether be sell trade. Me, when I have something like this here, so price can come into this area, mitigate this area slowly, and you can see this is a mitigation, and you see it's lower, so you're even getting more confirmation that this is going to be a buy because this supply here is not strongly pushing price down. And then you get this, and then you see price boom, finally takes out this area. This is where I'd like to come in. See, when this happen, so I'd like to come in. This, just get rid of this. This would be where my sales would come from, this zone. Okay, so this is like the high. So this is like one move. You need to understand that this is like one move. So we had this, and then we get this POS. So it's like one move. Okay. So when price comes back into this area, if I'm taking a trade, I need to understand that the proper area to be messed up is up there. So you can say yeah, it's quite very low. That's why you need confirmations and stuff to get involved in trades, right? And if you get confirmation, you can have a less stop loss and all that. But yeah, it's just something that I'm sure most people they know already. And then get involved in a trade there, and then price push down, and then finally it breaks the structure. Finally, it breaks this. Then you have a POS, so you know that okay, you're actually supposed to be looking for price to go down and all that. You see, all this was slow compared to this, and you're starting to think this was going to be a buy because of that. And see price mitigate this, goes up again, break this and all that. Some people can tend to get involved again into this because they're not really getting what is actually happening. They're not focusing on the strong high. They're focusing on here. Then you can get a trade. If you get out fast, you'll be in profit. But if you want to get out there or up there, then you'll be in a loss. This price could just come into this zone. Yes, probably mitigate this an area here, and then induce all this liquidity here, and then push down. Okay, but it's important understand the strong highs in the market. Okay, it's a strong high. So take out this strong low. Take out this. Now the strong high must hold. If it doesn't hold, it's taken. Then there's gonna be a strong low, which will then shift price to the other direction. So let me show you something with Nasdaq. Okay, we're gonna work on the 15 minutes and the 5 minutes, and we'll be done. With Nasdaq, this is what I want to show you. 15 minutes. Let's zoom it in here. So me, I prefer like price to pull back it to 50% area. For me to say this is like a proper print. Okay. So the most latest we had was this POS here, which if we take this high to this, we did pull back to the 50%, right? So this is my strong low. This needs to be my weak high. Which one was my previous? Well, it was this low. was this low to this high, and the price you can see didn't come back to 50%. So there's something like this. I would take it all the way to that, and then this would be the pullback. And then if you had gotten involved in a trade, it would have been here. You were supposed to pick area, grow, yeah, in order to would have been there. So for this one, it's the proper one. The ones we have on the 5 minutes, you can refine, of course, if you're able to refine. Okay, as long as it's below here, you need to know that you know those things with premium and discounts. So it's a good area here, right? Okay, so your price did tap on the 5 minute OB. I hardly use 5 minute OB, but I do use them. I hardly use 5 minute OB. So now you can see price here tapped on it and then went up. So if you had looked for confirmation entries within this area here, could have got a proper risk to take out this highs and all that and everything, because this high was taken. This was supposed to be a strong high, if I'm correct. But let me just go to the 1 minute for the sake of this. This 1 minute, for the sake of this, look for this high. Let's see how much the pullback was. Yeah, the pullback did tap, so this makes this that high. Makes this the high. Pullback didn't get into the area. So this could look confusing and stuff, but you can see this being that, and then this being the pullback into the area, and then that's good, right? Need to look for areas below, right? Need to look for areas below, and then could have entered here, targeted this area here, refine to, we're in the 1 minute, but if it was a higher time frame, they'll refine this and then get a proper trade, probably something that would be something. Okay, and then you need to understand this would be that strong low. You take out this one. Okay, this would be like one move, and then the pullback to the 50 or to the discounted area, and this being the high. 1 plus you take that now out. Okay, that's what you have. That's what you have right there. And this one was all. So if you had traded this 5 minutes area here, this is how I would say you would have taken the trade. Everything that you would see here and would just be getting induced. I see this low. Yeah, inducement, this low, and then okay. But I don't want to get much into details for this, but I hope you were able to understand and to take something out of the lesson for today. I'm just doing the best I can for people to understand. Like, as I said, you can have a strategy, but you might be failing to implement it. Okay, you can have the strategy. Like, it's funny because I've had people come to me. Most of the people like, oh, the FTMO strategy and the order flow 3.0 is simplified to be easier to understand. But the order flow 1.0 and 2.0 were a bit difficult. Not even much good to be able to trade day trading. Okay, but the FTMO strategy and the order flow 3.0, you can easily understand and easily do the day trading with them. Okay, so it's funny because I've had people who got their videos from my other students who linked their videos of order flow 2.0 and 1.0, but they came again because they don't understand, they don't know how to implement the strategy. So they would come and ask me questions saying, okay, we have your videos, but how do they work? They don't work, what, all that. And then when you explain it to them, they then understand, of course. If I'm explaining to you, then it would mean that you probably my student also. But yeah, this is something that's what you're having on this episode of the Sketchy Videos. So I hope this was helpful and you'll be able to learn something. Like, I want everyone to have a good year this year, a good trading year. Okay, guys, good trading. Yeah, be able to pass those challenges, those FTMO, those my forex funds finding talent, or any other profile that you're doing, being able to pass it. Okay. Okay, that's gonna be all in the points.